Hello and welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space. I'm Manisha Gupta. Well, the finance minister in his last budget paved the way for trading options in commodities. Now, it's been a year since then, but commodity investors are still waiting to trade in options. Why is the final framework taking so long? What's leading to this lack of clarity and a proper blueprint? We have with us the exchanges themselves. Mrugang Pranjpe is MD and MCX. Sameer Shah is MD NCDEX. We also are joined by Vijay Sardana, who is member Commodity Derivative Advisory Committee. But before that discussion, let's listen into what the finance minister had said about commodity derivatives in his last budget speech.
New derivative products will be developed by SEBI in the commodity derivatives market.
And it was the CDAC which had actually recommended that options be traded in commodities. But before we go to CDAC, let's get in Mr. Pranjpe and talk to him about on what his exchange is readying in sense of options. Mrugang, hi. The options in commodity markets was announced by FM in the last budget, allowed by SEBI in September 2016. But we still are awaiting the final norms. Until when do you see the option launch actually coming in? What is the progress and where are the exchanges when it comes to that?
So I think you're absolutely right. The expectation is that given the Honorable Finance Minister's announcement last year during the budget, this will be something where the government would want to sort of complete the entire process before this year's budget is announced. We expect, therefore, the final guidelines to come in before the budget. From our perspective, absolutely ready in terms of the operations readiness, in terms of technology. We've in fact been doing a lot of training with members. So, just to give you an idea, since about 15th of November when we started really doing member trainings, we've conducted more than 60 plus programs already with members on options. So from our side, it is really the whole training in terms of people and the market, which is going to be the important step, and that also is something which we are completely geared up for.
Mrugang, also, which commodities are you really ready with? What is in the agri space that you're watching and what is in the non-agri space that you are ready when it comes to options?
So I think from our perspective, again, we believe that we will want to be ready at least in multiple commodities. And the reason for that is not that we want to just not give out one name, but the reason is that we believe that there will be some opportunities in some of the commodities which will be more opportune in terms of the timing-wise time actual regulations come out. So in the non-agri segment, in terms of the contracts that we have, the liquidity, the participation, the end-to-end value chain that we sort of engage in, both gold and silver in the bullion space, copper from amongst the base metals, and even a crude oil contract makes complete sense for us to look at. And in the agri segment, again, we've seen a lot of interest. In fact, we've seen interest from the actual hedgers, from the industry, both in cotton as well as in CPO. So we are preparing for all of these contracts, and let's see how finally the regulations come out, after which we will decide which one to apply for.
Mrugang, we understand that the delay in launching options really is about because the regulator is still thinking about on how it should be settled. What is your opinion as an exchange? What is the feedback that you have given to the regulator on how the settlement on these options really should be done?
No, so I think I don't want to jump the gun there. I think we are at that last stage where me saying anything will probably just add to the confusion that you said. I think SEBI is completely seized of all these challenges. They've received all the inputs from the association, from members, from exchanges, from hedgers. CDAC has formally met and sort of given its recommendations as well. Let's just wait to see what SEBI finally comes out with now.
All right, Mrugang, thank you so much for joining us and giving us your view on that. Let's also get in a perspective now from Sameer Shah, MD NCDEX, who joins us on a phone line. Sameer, hi. You heard what Mrugang had to say on how that exchange is readying. What is your sense? I mean, first of all, I really want to know on why the delay. Is it only about settlement? Is it only about the feedback? What has taken so much time, really?
Well, I think, Manisha, the main thing is to get it right, and whatever time it takes to get it right is important. I don't think, I don't think SEBI is under any pressure to sort of, move fast enough in order to meet some deadlines. What is important is to get the design right, get the end customer focus correct, which is farmers, hedgers, processors, and really position options as a key risk management tool. I think it's just about being ready. I mean, many other markets, for example, China is also in the process of, launching options in commodity markets for the first time. And they are taking their time. They're thinking through the design. They're thinking through implications because these are instruments that, if not thought through well, could spin out of control as well. So it's important to get it right. And I believe that, SEBI has done everything possible to get all possible views on the table, do the widest possible consultation that is necessary to get all views on the table and get all the considerations. So I think it's just a question of dotting the I's, crossing the T's, and getting the sort of the final regulation out to the market participants. So I do believe, like Nirang said, that we are at the last stage, and I don't think that there is any need to put artificial deadlines on this, and just allow SEBI the bandwidth to make sure that that the right design is placed in the market.
Samir, your point is well taken. I also do want to understand, I mean, as exchanges, you have done a lot of work. You are the ones who also have given the feedback in CDAC to SEBI as well. So how do you look at the options really complementing the existing market, and how cost effective is this going to be as a hedging tool?
Oh, it's going to be extremely important to get options launched. It is a more fit-for-purpose risk management product. Given the way the options design works, the writer of the option takes the risk. The buyer of the option purely pays a premium, a one-time premium, and gets risk management cover on his or her exposures in the business. It's absolutely perfect for risk management. And the interest that we have seen from the industry, we've been engaging with the industry for the last couple of months. The interest that we've seen is tremendous, including from farmers and farmer producing organizations are crying out for a better insurance type product and a better risk management solution. Hedgers, processors are waiting for a solution like this. So the demand is quite intact. And it's a better product as compared to futures, and both will actually coexist quite nicely. You do need, unlike equity markets where the exchanges also trade the spot segment, in commodity markets, as you know, there is no spot segment that is exchange traded. So the futures and options coexistence will be very important to offer sort of correlation trading based on futures and options, and each will offer a source and sync kind of capability to the other market and develop it seamlessly.
Samir, one more thing before we let you go. What's your sense? I mean, when you said that the markets have shown tremendous interest in this, how do you see the farmers, SMEs coming into this? Because that really has been a push that has been coming in from the government, at least on this.
They are very positive. They're extremely positive. It's for an option buyer. It's, as I mentioned earlier, it's a one-time premium that needs to be paid that provides the perfect insurance cover and risk management cover for their exposures. So they are ready. We've already seen farmers, despite futures not being a 100% fit for purpose product for farmers. Even then, despite that, we've seen almost 10 FPOs and about 20,000 farmers represented through those 10 FPOs who have used futures in this financial year. And we believe that could grow exponentially if a better designed solution is offered. India spends almost 1 lakh crores on MSP program, the minimum support price program for mainly oriented around rice and wheat and a few states. This could be a very good complement to the minimum support price program, and over time it could be a very, very credible substitute as well. But that's some time to come. But in the meanwhile, it definitely will be very complementary.
Point taken, Sameer. Thank you so much as well for joining. Well, that's the view coming in from both the exchanges, MCX and NCDX. Looking forward to the options, and in some sense, perhaps they're ready as well to launch that as soon as it comes in. But let's also get in a view from CDAC. Remember, all the inputs that the SEBI has been getting has been via these meetings, this committee, and Vijay Sardana, member CDAC, as well joins us to talk about that now. Vijay, hi, thank you. We've taken what the exchanges had to say about this, but as we have been talking, as we understand, we still are awaiting the final format, and it is the settlement where perhaps the regulator is stuck. What has been your sense? What is that the committee has been discussing on that?
See, as you rightly said, that all the stakeholders have given their inputs, and option is a very important instrument to do the risk management at all levels. At the same time, you must have also heard that Prime Minister of India has also said one thing very clearly, that all the exchanges, especially commodity exchanges, must play a meaningful role, and all the products, whether it is futures or options, whatever we do, it must make sense to the local economy and local partners or participants. Now, keeping all these objectives in mind, all the inputs which are coming from various stakeholders, it is the responsibility of CDEC and SEBI to see that whatever decisions are taken should deliver something what is meaningful and what is expected by the society and stakeholders at large. So that is the discussion which is going on, and there are different views. That is why it is taking time. And ultimately, whatever I believe that CDEC or SEBI will decide must have a relevance to ground reality of India. Very often we look at examples from outside India where ground realities are very different. So I feel that this is important for us, and Prime Minister himself has very clearly flagged this issue, that today one of the biggest criticism of commodity markets in India is that we are not delivering the services or the meeting the objective for which they are created.
Sure.
So
Vijay,
I
I get your...
when the message is from the highest level.
Vijay, I get your point on that, but what is it that the CDAC really has, commented on, has given an input when it comes to a settlement kind? Because we understand it can be cash, it can be delivery, it can be a convertible of option into futures. So what is a more favorable one that the committee has been talking about?
See, what the committee is discussing is that how the whatever options we are planning to bring. See, please appreciate that Finance Minister in his speech said that we want more farmers' participation, we want better use by the small-scale industry and local industry in the commodity market, so that they become these tools becomes actually a risk management tools for them. Now, keeping those objectives in mind, there are different possibilities which are under consideration, and how we are going to encourage small-scale industry and farmers to come and join this new movement of commodity markets. This is under consideration. And there are different very interesting inputs are there on which CDEC and SEBI is discussing.
So how soon do you see these norms, you being fixed? How many meetings has CDAC had? How many times have you met SEBI? What stage is this at right now?
See, a lot of data is provided by various exchanges and participants. When we are exploring these data information given, there is always a difference of opinion on certain points in which more data is required. And this process, as earlier both the exchanges have said, that we don't want to put any artificial deadline. Whatever we do, it must be relevant to the ground reality. And that is why it is taking time, because anything if we do in hurry and tomorrow people will come back to us why CDEC or SEBI has not looked into the following things.
But Vijay,
why
are we expecting,
or why we are running?
Vijay, I take your point well, and the exchanges as well have said that you can't run on a deadline here. But do we see options coming in now in the month of Jan in this fiscal year? What is the sense now?
See, I will only say that there is a request from the various stakeholders to submit additional information. I am sure they must be working on it. As soon as that information is there, CDEC will consider, and we will have a way forward.
All right, Vijay, we'll let you go at that. There still is no timeline coming in from all the participants on the meeting. And of course, the markets have been though saying that it perhaps could come in Jan ahead of the budget. And that is what the markets are looking forward to. But with that, it's time for a quick break. But up next, we have Kunal Shah, Head of Commodities and Currencies Research at Nirmal Bang. We also would be joined by Mr. V.K. Sabharwal, who's ex-president at Commodity Participation Association of India, to discuss if the markets have enough appetite to play options and how ready are they.